Mortgages for self-employed buyers. If you are self-employed, a business owner, or an entrepreneur, you still have options in purchasing a home. There are parameters that you need to meet, and in this video, we will go through the steps that you need in order to become a homeowner, even if you own your own business. If you're new to the channel, do me a huge favor and subscribe. Let's get into it. Typically, business owners don't think they can get pre-approved. One of the prereqs for that is that you need to be in business for at least 2 years in order to get financing using FHA, VA, USDA, or conventional financing. Now, with those traditional programs, you have to have a 2-year history because we need 2 years of tax returns. So this list of documents that you're going to need is crucial to you getting pre-approved, and how they're set up is also crucial to you getting pre-approved. So first things first, you need to have 2 years of tax returns, all pages, all schedules. And on those tax returns, we go by what income you show that you made. Example, if you look at your tax returns and you file as an LLC or sole proprietor, you should have something called a Schedule C. If you take a look at your Schedule C and go down to line 29, it will say profit or loss. What that tells you is how much you made for that year or how much you lost. Let's use the example of you making $20,000 as income profit on your profit and loss statement. However, in your business, you made $100,000. You technically did not make $100,000 because you took $80,000 of that profit and said, hey, that's what runs the business. The $80,000 is what you use or it costs for you to run the business, which left you with $20,000. Now, what we're going to look at is your 2 most recent tax returns. We're going to look at a line 29 for both years of tax returns. We're going to add those together, and then we're going to divide it by 24 months because that's 2 years. That will give us the average income over the course of 24 months. So it gives us the average monthly income. Another key in the document that you're going to need is a year-to-date profit and loss statement. Throughout the video, you may hear me refer to it as a P&L, but that means profit and loss. The profit and loss statement is going to be, for example, from January of X year, and let's say you apply for a mortgage in July. So it's going to be the profits you made and any expenses that you plan on writing off up until July. What we do is we take that and we divide it by the amount of months. So in that case, it'll be 7 months. And we compare what you're currently making on your profit and loss statement versus your 2-year average on your tax returns. If the 2-year average is higher, then we go look at the profit and loss statement, because if that number is lower year to date, we're typically going to go with the more conservative number, which is going to be on the profit and loss statement. If the profit and loss statement for that particular year shows that you are making more money than the prior 2-year average, we're going to go at the 2-year average. The reason why we do that is because self-employed borrowers, entrepreneurs, the interchangeable words, self-employed borrowers / entrepreneurs, they don't get taxes taken out when they receive their money. So they have the ability to write different things off. Each business has a different requirement of what it costs to run the business, some years better than others. So that's why we take 2 years of the tax returns and we average them to get an average. 1 year might outweigh or might balance out the other. And then we also look at the current year, the year-to-date profit and loss statement, to make sure you're still making that income or better. If it's a little bit less, then we typically go with the more conservative number, because again, you have the ability to write off so many different things as a self-employed buyer or a self-employed business owner. Which goes to my next thing. When you're looking to purchase a home in the future, and if you prepare, then you want to have a conversation with your tax preparer. You want to let them know, hey, Mr. and Miss Tax Preparer, I'm looking to purchase a home for my family, so I need my tax returns to show an income. because without showing a income for your tax returns, on your tax returns, you're typically not going to be able to buy a home. So you want to have that conversation with self-employed buyers, self-employed business owners all the time. And half the time they just give their accountant or tax preparer free range on what to write off. The purpose of that is it mitigates the tax liability. If you write more off of your income based off expenses that you've used and that you legitimately use to run the business, then that's less that you typically have to pay the IRS in a tax bill. However, in this case, you want to make sure you prepare yourself to show that you're making enough income to support the current debts that you have on your personal side, as well as the new debt for your mortgage. So it's very important and very key to have that conversation with your tax preparer well in advance of you purchasing a home. A lot of people say, hey, can I go back and amend my taxes? And when they ask me that question, I say, please reach out and talk to your tax preparer and have that discussion, because I am not a tax preparer, nor did I play one on TV. The next documents that you'll need to provide to us is a copy of your 2 most recent bank statements. Now, this is key. Typically, as a business owner, you should have separate accounts. You should have an account for personal banking and a business bank account. We're going to need both. We're going to need your personal bank account as well as your business bank account. And then the other bank statement that we would need, if it's in a different account, we need to see where your down payment and closing costs are coming from, so we can show that you have the funds to purchase a home and that you have the adequate down payment and closing costs so you can move forward. The next item we will need is a unexpired driver's license. We need to have your driver's license to verify who you are, which is a government ID, and then we need to have another form of government ID, whether it's your social security card or your passport. Now, once we have that documentation, we also need you to fill out an application so that we can pull credit. We are going to look at personal credit. We are not pulling your business credit. So in a lot of cases, people say, well, can I get the house in my business name? No, we're personally loaning this to borrower A, and we're going to look at his or her personal credit. The income that they bring in is coming from their business or whatever draws they have, pay out to themselves, and we're going to utilize that income to qualify them. So we're looking at the debts of the personal borrower and the income that they bring in, and that allows for us to see how much that person can qualify for. When you're self-employed, you don't typically have a higher down payment if you use FHA, which is 3.5%, conventional, which is as low as 3%, but sometimes 5%. If you are a veteran, you can be self-employed and still get a 0 down payment, as well as USDA. If you are finding this information helpful so far, do me a huge favor and give this video a thumbs up so we can push it out into the YouTube algorithm. I asked you to stay to the end of the video so we could give you some additional helpful tips. One of the biggest mistakes that business owners have when they're running their business is accepting payments through Cash App. So I understand that Cash App has monthly statement that they can provide to you. However, the problem is the Cash App payments going in and coming out being convoluted. Some are business, some are personal, and we can get that statement, but we're going to ask a ton of questions. If you're currently operating a business and you accept payments in other forms of cash or credit card, you may want to sign up for a Square card, you may want to sign up for PayPal, or you may want to sign up for Stripe. The other thing is, I mentioned earlier that if you have separate bank accounts to provide personal and business, I advise you to set up 2 separate bank accounts, one for your personal banking, one for your business banking. It will take away a lot of headaches when you're going to your tax preparer to have them prepare your taxes, as well as when you submit your application and apply for a mortgage. This will help us see clearly the difference in what you have going out in expenses, as well as what you have going out on your personal side. Also, if you are finding this amazing, we have a free Facebook group that we would love for you to join. It's interactive. We post 5 times a week. We have contests, we have trivia. If you would like to join the Facebook group, the link will be below for you to join. Also, we have a free weekly newsletter where we provide updated information on the market. We also provide any updates we have on home ownership, tips and tricks on how to become a homeowner, as well as videos that you may have missed on YouTube. If you are interested in learning about non-traditional loans, such as bank statement loans, because you're a self-employed borrower, click here. And if you would like to learn more information on how to qualify for a loan as a self-employed borrower, click this video here.